Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is our first edition of 2015 of Market Outlook, and Happy New Year. So, don't forget to sign up for this on our website at www.marketgauge.com. Get this free every week. So, without further ado, let's take a look at some of these charts here. Clearly, what we have in the S&P, we're going to go through these key indices and try to make this a little bit briefer this week, as it is a good day to watch some football. So, here we go. The SPY, spiders, as you can see, we barely made new highs over the last 3 or 4 days, and that action at the new highs without much travel was definitely disconcerting. I had pointed that out in an earlier market outlook as well. Now, if you go back, you can see back in September, before the biggest decline for the year, that 10% decline or so, you can see that again, that the market had made new highs but couldn't make much progress. So this is a concern. The fact is that we did make new highs. Instead of following through with more momentum to the upside, the market paused. You got about a 2% sell-off. Even though you made new highs for the week, you ended up actually down fairly substantially on the week, about 1.5% or so. Now, key levels to watch. Obviously, this 50-day moving average and the 204 level, which is about where that 50-day moving average comes in. Now, you should have some level of support around 202.50. Another interesting thing to note is on the down day, you did get bigger volume than the prior day and better than the 50-day moving average, and the market did work off a short-term overbought scenario as well. Now, even a little bit more troubling is the IWM, and as you can see, the IWM, similar type action. We basically took out the all-time highs, couldn't really make much progress, and sold off again. And again, key level to watch is that gap. I'd like to see that gap actually hold as sort of a breakaway gap of sorts. If not, and we start trading again back under the 117, 118 level, could definitely portend some trouble here. Actually, let's get a more precise number. We're talking 117.50 is the gap. So we want to watch the 117.50 level in the IWM. And remember, we got all of this consolidation, this sideways movement, and really couldn't get anything going and even holding above this new high in here. So again, suspect as well. Now, another little chink in the armor is NASDAQ. We actually closed pretty much at or just under the 50-day moving average. And remember, NASDAQ still the leading index in the U.S. here, but it could not make new highs. So when the leading index starts to stall, we definitely want to take notice of that. And again, looks like we're about to fill that gap on NASDAQ. We definitely want to see how we didn't quite fill it on Friday, but we want to see how that acts as well. The critical number to watch in NASDAQ is this low on the sell-off in December, and that coincides with exactly 100. Now, we are getting a little bit more oversold on the short side here in the RSI, but these things are prone to getting even more overbought or oversold, and so I would put less emphasis on this at this point unless it was down there for several days or more under the 3 level in this 2-day yes, it's a 2-day RSI. So again, that critical level really is 100. Definitely want to watch it. So you can see definite chinks in the armor in some of that short-term price action, which could lead to more trouble. Conversely, really need to see the markets close well on new highs. That would confirm another significant leg up. So we got this variance here of about 1.5 to 2% from the all-time highs to really feel comfortable and get about getting back in. Let's take a look at some bonds. Let's take a look at some bonds, and then we'll get back to the market internals. Again, with Russia melting down, lots of flight to U.S. Treasuries and bonds as well. You can see here we basically closed on the highs of the year in U.S. bonds, the 20-year. So trend strongly intact. This looks to be persistent. No pause in this trend whatsoever. We do want to watch, however, that the potential taking out of the 50-day moving average and the recent lows around the 122 level, let's get an exact price, 123 level is sort of important here, because this could be tracing potentially, if we do take out that 123 level, a potential top in interest rates or a low in interest rate yields and a top in price. So we definitely want to watch that type of price action in here as well. And we're getting pretty rich on our short-term RSI, so we want to see what happens here. And again, a move through and up above the highs here, above that 128, would definitely confirm further movement to the upside and another potential count of another 7 or 8 points in the TLTs. Taking a look at some of the other market indicators, let's look at the McClellan oscillator, basically sitting right around its midpoint, plenty of room to move on either side. Now, the last signal we had was a buy signal off of that low. Really didn't give us very much unless you literally bought intraday. This generally works best on a closing basis. By the time you got the signal, you're basically rented a little bit of money to the upside. As the market's corrected, it's about where the market opened up the next morning off of this signal above the that green line there, which is the minus 150 level in the McClellan oscillator. One other thing to take a look at is USO, the U.S. oil fund. Let's take a look at that. I'll rather do it on this chart here. Let's take a look at oil. Oil closed on new lows. I actually saw here in Santa Fe, New Mexico, oil prices at $1.76 a gallon for regular. That's pretty damn cheap. And as you can see, new closing low. Critical point to watch here, obviously a move in OIL above the 13 level, and the 10-day moving average would basically trap latecomers to the short side in the oil market. I said it was OIL, but let's take a look at USO as well. This is the United States Oil Fund. Similar action, and again, a move above the 10-day moving average and that recent high before the market broke down to new lows here would indicate a potential pause in the free fall in oil prices. Okay, that's it for now. Have a great weekend, what's ever left of it, and see you next week. And again, don't forget to sign up for this at www.marketgauge.com.